Hello everyone, it's James. This is a quick midweek update after the FOMC meeting yesterday. Kevin Walsh coming out as expected as cautiously optimistic about the economy, but also hawkish, slightly hawkish in his tone about future rate hikes and still leaving a lot of uncertainty. And also, I think the market kind of likes his idea that the crowd knows best, right? And he's taking away guidance from the market a little bit and letting the markets decide. And I think that's probably the right way to do it. As a result, as he mentioned, we've seen bond yields moving up a little bit, and assets have sort of moved in a range as we repriced. So this is going to be a brief update. I'm still struggling through a little bit of flu, but let's start from the top left. Bitcoin is just hovering around the $63,000 level in a massive range now, testing the bottom and the top repeatedly. And if anything, it looks kind of bearish, to be honest. I'm still long, and we've got positions holding above this 200 period moving average on the 4-hour chart. Going to the Bitcoin chart itself, and let's look at the futures. You can see on the day chart here, looks kind of iffy really. We should have moved quite a lot lower with this bear flag breakout down below here, down to about $50,000 the target, but we've got stuck in the middle here in a sort of a large range and also a potential expanding pattern, which is a reversal pattern, but the large range looks more like a bear flag. So pretty tricky, and unless we bounce out of here today and this week, we'll end up with a fairly droopy or negative weekly candle. So far we got 1, 2, 3, and maybe now 4 this week doji candles holding the 200-week moving average. And that's a pretty important level. And you can see every time we get down to the 200-week moving average, there's something that happens. We either dip slightly lower below that, or we kind of react to it. You can't see further back on this chart, unfortunately. So back to the 4-hour chart on Bitcoin, not much to say really, apart from the fact that we are holding, but in a range and it's going sideways. The same on the spot price over here. So not a lot to add apart from if we break down below this level here and below the bottom of this range. And in fact, we could put a trend line in there as well now. So it's kind of forming, a decent sort of range. And if I duplicate that, you can see the top of the range that we've been approaching as well. So an ascending channel like this is pretty bearish, really. Really want to see a descending channel, which would form potentially a bull flag. But anyway, that's the way it is at the moment. We'll see how we play out today, looking for and hoping for a good, strong weekly candle. Same with Ethereum. I'm not going to go into that right now. And then on the NASDAQ, let's go to the NASDAQ page. Now, what I warned last week was that we may fall down below the trend line and the 100-period moving average and head down towards the 200 and the top of this breakout range. It looks like we're going to do that now. There's the 200-period moving average here on the day chart. There's the 50% retracement at 26,800. 750 really, and there's the top of the breakout range after the Zweig breadth thrust, and that is at 25,900, call it 26,000 round. It's also the 61.8% Fibonacci retracement, and also, as I pointed out in Sunday's video, by the way, I'm doing a live stream again on Sunday. Please make sure to subscribe and like the channel. It's also a big volume gap seen by the VRVP on the right hand side here, and that often needs to be filled in. The best case scenario would be a move down to the 200-period moving average 26,800, but considering that the range down below here is still pretty empty and that we haven't retested that breakout level, that's probably more tempting. However, as I said, if you zoom into the 4-hour chart, let's go back to the other page, you can see that NASDAQ actually performed a bit of a reversal yesterday after the FOMC with a whipsaw action followed up by a tweezer bottom with a piercing pattern reversal type pattern. So that's the way it looks at the moment, and we're still holding the long. We got long right at the bottom, and as long as we hold that low down there at about 27,000, I'm going to remain long. But if we break and hold below there on a 4-hour basis, I'll reverse to short. Actually, I'll hedge my position, keeping the longs on, and then see if we can ride that down to the targets that I showed you here on the day chart at either the 50% or the 618 fib. Right, so that's stocks. NASDAQ, S&P will probably follow suit. On gold, we're still long. This is a tricky one. Let's go to the gold page. We have a similar situation on gold to what we have on the NASDAQ, and we've got a big fair value gap down below us. As you can see on the right-hand side, a massive empty zone on the VRVP. We're busy retesting that in a bearish movement down. The breakout triangle's down here. That's the 78.6% fib at about 3,480, and we're at the 618 fib right now at just around $4,000. Let's have a look at the day chart. Doesn't look very convincing. A range, potentially a bear flag if anything, and on the 4-hour chart, zooming in a little bit, just holding that breakout trend line. But what does look a little bit better is the weekly chart, and if I have a look at that, you can see we've actually broken up above a long weekly trend line with an inverse hammer candle last week, and this week just holding the trend line after a retest from the top. So that looks quite good from a weekly perspective, but whether we can hold here or not, I don't know. The big problem here, switching across to the 10-year yield, is that the 10-year yield is repricing higher, as Kevin Walsh pointed out, and this puts the mockers on anything that doesn't have a yield. This is a yield, and as this yield increases, things that don't have a yield or have lower yields or lower projected yields will suffer as a result, and the bid will be on the 10-year yield. So that's the problem with gold and silver for that matter. And if the 10-year keeps moving up, we may have to hedge these. And then considering the 10 years moving up so dramatically, it's interesting that the dollar has actually fallen. I put this up on X a few days ago saying we might get a double top here after the FOMC. We didn't quite get up to those highs, but we certainly double topped it, broke down through the trend line, and we're now trying to move lower. I have short positions on the dollar against some of the other major currencies. I'm going to have a look at natural gas and WTI crude. We have got no position on crude, but natural gas I have a long on. And natural gas is interesting. Let's quickly have a look at the futures chart over here. You can see we're stuck between two large order blocks. We've reached the bottom order block right down here, and we actually double tagged the bottom with a daily tweezer, and actually it did make a fractionally new low and then moved up more and closed more than halfway up the previous bearish candle. So technically it's a piercing pattern reversal candle too. That's the day chart. And on the 4-hour chart, well, it's just looking iffy. Did have a couple of reversal candles here, but nothing really exciting. The low there is at $2.65, and any move down below that I'll hedge, and then I'll expect to move all the way back down to the bottom of this block and the range down closer to 250, and there's even a potential for that to move lower. However, I think we're moving into a bid season. Storage is starting to turn around, and so is the COT report, and it looks like a bid is coming across the commercials and some of the larger traders. So we'll see how we go this week. We'd really like to finish this week off quite strong, and looking at the weekly chart, you can see it doesn't look great at the moment. So a move up today or tomorrow would be great to finish that week with a 1 up, 1 down reversal pattern, and that would bode well for a move higher up. My ultimate target remains 375 and 425 and perhaps even higher. On oil, I have no positions currently. This is the 4-hour chart on WTI, but I did put a post up on X saying that I think that we might have to go a little higher, and my idea is for a closing of that gap slightly above us. Actually, the top of that gap is about $89.50, but at least to $88, this line here. And also zooming out, allow for a move all the way up to the 78.6% Fibonacci at $103 if we are to get moving and things go awfully wrong in the Gulf. That's the 4-hour chart. Let's have a look at that on the day chart and zoom out a little bit. That takes us up to about there. But I'm going to have a little go at it at these levels around here that I mentioned earlier. And bear in mind that if we do repeat something similar to 2022 with that green line like that, it'll look something very similar to this over here with the Russia-Ukraine war that started back then. So that's it, folks. All looking a bit precarious. Be very, very cautious. The after effect of the FOMC, what Kevin Walsh said, and the lack of guidance will guide these markets, of course. And also whatever the outcome day by day in the Straits of Hormuz and Iran are, obviously affect this market, the oil price, the bond market, and everything else very dramatically. So take care, be careful. And if you're confused or if you want some guidance, come and join us in our private group. It's free for 2 weeks. The links are below this video. I'll see you on Sunday as usual for Sunday Night Live. Make sure to subscribe, hit the notification bell so that you don't miss it when we go live. Take care.